Hi guys, hope you guys are good and welcome back to today's video, right? We will be doing a weekly end of week breakdown, right? So the reason why this is important is because firstly, it will give us an understanding on what we can anticipate in today's trading, seeing that it's Friday. And the other reason why this is important is because it will set a tone for us into having to understand what we can anticipate in next week's trading as well, right? So if you guys happen to find the information shared in today's video valuable, I would appreciate it for you guys on YouTube to subscribe to my YouTube channel. And I'd also appreciate it if you'd follow me on my TradingView profile as well. And the reason for this is because I do drop my day-to-day analysis, right, under my idea section. So with that being said, let's get into it, right? So I want to talk through this post over here that I did on the 8th of May, where I was seeing a potential temporary buy side draw towards these objectives being the buy stops and then the mitigation block, which is aligned with that H1 bearish order block. And the reason why this was very important is because we wanted to see price for the liquidity void. So in today's video, I want to talk through why I was seeing that temporary draw towards the upside. And then now that we're here, you know, why are we seeing a long-term bearish draw towards this daily discount fair value gap, right? So if you guys have watched the weekly outlook video that I did on Monday, I will attach it to this one. You'll see that I broke down GBPUSD from a weekly time frame perspective, going all the way down into our lower time frame perspectives. So if you have seen that video already, you'll get a gist on why we are seeing a long-term draw towards the downside on GBPUSD. So we will touch on that a bit in today's video, right? And not so long ago, about an hour ago, I posted this GBPUSD continuing the bearish institutional order flow towards the downside. So all of this is having to emphasize why I am seeing a draw towards the downside. And at the moment, I am currently in a sell over here. And in today's video, of course, you'll also get a gist on how I enter my trades. I am an intraday trader, right? So all I look to take is 4% and then I'm done for the day. So if next week comes in and we still haven't seen a move all the way down there, I'll still continue to take sells, right? So I don't swing the whole move, all right? So like I said, I want to explain exactly why I saw price draw all the way down there and why we might be seeing a draw towards the downside off of this point, right? So with that being said, let's get into it. So just to give you guys a bit of context, we understand that GBPUSD, the first quarter of the year being January towards until March, had been very cumulative in nature. And like I mentioned in Tuesday's video, just for you guys to experiment, right? Divide the year into quarters, into 3 months each, right? And what you'll start to see is every quarter has a different behavior, right? Every 3 months, you'll get a different move in price action. If price had been moving in a specific direction, then you'll start to see at that, after that quarter is done, you'll start to see that price has now switched into a different direction, right? So just have that, experiment that. So let's just do that real quick. So we'll start on January all the way down to April, because that would be 3 months, right? So you'll see that price had been very accumulative for the first quarter, and then eventually we got a reversal. And then once April started, we got heavy movement in price action, right? So we were bullish for a very long time, and then April started to come in, and then you start to see heavy volatility start to come into the market. So this is the second quarter's characteristic, right? And what we're anticipating is a continuation towards the downside, right? So for the first quarter, we had been very accumulative. And in that accumulative nature, right, we then saw smart money push the market higher as to take these buy stops all the way up here. We understand that off of this last candle here, we regard this as a breaker in which I spoke on this on Monday, how this would be our institutional resistance point, right? Because at this point, smart money had to buy this candle, which resulted in this move higher, which then absorbed all of the liquidity, all of the retail, liquidity that was up here in terms of stop losses and all of that. So they used that, which is regarded as buy stops, to sell against, right? So all of this retail liquidity up here is seen as willing buyers for them to sell against. So that's why we then started to see a move towards the downside. We got a market structure shift over here. And then what you start to see is we start to respect, premium P areas such as that order block over there, bearish order block, continue towards the downside. We find a bit of support here. We pull back into this weekly fair value gap. That's when we started to see heavy movements towards the downside. We also respected that daily bearish fair value gap there as well, right? Off of that point, we got a heavy move towards the downside that absorbed these sell stops over here. So we understand that's how price moves from taking external range liquidity. We then want to see the market draw towards internal range liquidity. So it's drawing towards, sorry about that. So like I said, from external range liquidity, we want to see the market draw towards internal range liquidity, right? Being fair value gaps, points of interest such as this break over here. We understand that when price was trading all the way down here, the buy orders that smart money had initiated to push the market higher, those buy orders are now in loss, I meant to say, right? So now we want to see the market draw back to that point to mitigate those orders, those buy orders, and initiate new selling orders. So for the past 3 weeks, I'd seen the market draw all the way up there, and then eventually we'd want to see this point as a strong institutional resistance point to then see a further draw towards the downside. So, on a long-term perspective, we want to see a bearish draw on GBPUSD. Okay, cool. Just more confluence to align to the fact that, this was a reversal and it's not a retracement, and how we want to see a continuation of the draw towards the downside, specifically to those reference points down there. I did not touch this on uh, Tuesday's video. I want to show you guys. I want to show you guys this concept called SMT divergence. I have done this in my, you know, in one of my videos. I will attach it to this one. And for you guys on TradingView, you can just look through my video catalog and look for Smart Money tool, the Smart Money tool, SMT divergence, right? So just to talk through that, we can see how smart money divergence works is we understand this is the DXY down here. We understand that GBPUSD is associated to the dollar, right? So however the dollar moves, we want to see you know, a symmetrical idea printed in GBPUSD, right? So you want to envision this line over here as your mirror, right? So whatever is happening on GBPUSD, of course not 100% so, but you want to see a 80 to 90% correlation or symmetry in the two. So we can see on GU we made a high over here, then we made a low, then we made a higher high, right? So we want to see that symmetrically on the DXY, in which we can see if it was symmetrical, we would have wanted to see the DXY go all the way down there to take those sell stops down there and then to continue higher. This would be a symmetrical market condition. So if it's not the case, if it's non-symmetrical, you then conclude that this is a non-symmetrical market condition, and in a non-symmetrical market condition, you want to anticipate a reversal to occur, not a continuation, but a reversal. So automatically we get an understanding that this right here is not a reversal, but not a retracement, I meant to say, but it is a reversal. So it's reversing, right, on the GBPUSD, and on the DXY, it's continuing towards the upside. It's also reversing to continue towards the upside, right? So in an institutional perspective, what is happening is we have an understanding that only smart money has the liquidity to do such a thing, to buy the market at such a point, such that the market doesn't continue all the way down there to take those sell stops down out, right? So this is smart money's influence. So you're having an understanding that smart money is currently accumulating orders in the DXY at the moment. And what does that mean for GBPUSD? It means we're going to be seeing selling, right, on GU, right? So that's just to build up evidence on why we're seeing a draw towards the downside, right? So we have the breaker, we pulled back all the way up there. Another important thing as well, if we're going to be marking our premium and discount tool, we understand after smart money took these sell stops, they accumulated long orders in discount prices to take profits in premium prices in places of fair value, such as fair value gaps, right? So the fair value gap, which is in a premium price, we understand that once price reached that point, we then want to see selling start to, you know, be introduced into the market, right? So let me just erase that. So we understand we had a premium PDRA, daily fair value gap. Now we want to see an indication that the market is wanting to continue towards the downside. We see after that fair value gap, we get a market structure shift over here in which sell stops are taken. External range sell stops are taken, right? The next draw is towards internal, right? Internal range liquidity being the daily fair value gap. So after we take the daily fair value gap, what do we understand? We want to see new selling being introduced and for the market to be drawing towards external range liquidity being the sell stops, right? And another thing, if you are selling in a premium price, we understand, let me just denote that. We understand that whatever exists above this point over here is premium prices. So this daily fair value gap is in premium prices. So if you understand that if you're selling at a premium price, where would you be wanting to take your profits at? At discount prices, being the discount sell stops, right? You want to see the market draw towards discount sell stops, but most importantly, you want to see it draw to a point of fair value, being this fair value gap down here. This point is important because at points of fair value in discount prices, those are points in which you want to see smart money start to book their orders, basically start to scale out their positions. So from this daily fair value gap, we want to see a draw towards discount prices. And then eventually, we want to see a draw towards external range liquidity being the sell stops down here in order to continue the move towards the downside because we understand that the daily time frame is bearish in nature or currently bearish, right? So with that being said, let's go on to the H4 time frame. Okay, cool. So on the H4, right, we got a heavy move towards the upside, right? Just bring back that tool. We got a bullish draw towards the upside, which resulted in price having to take these premium buy stops. And most importantly, it also drew towards this breaker, right? This point is very important. It's a very strong resistance, institutional resistance point due to the fact that when price was still trading over here, smart money had to buy this candle, which resulted in the move towards the upside, right? That filled that weekly fair value gap. But most importantly, it took these buy stops up here, right? That they had to sell against. So those buy orders were still in loss for this whole time, right? So the moment they bring price back here, they mitigate those buy orders and they initiate new selling orders. So that's how the breaker works, right? So now we start to see, a movement to the downside in price action, which resulted in price having to take these sell stops over here, right? And then we saw a draw. Once we take these daily sell stops, now we want to see a draw towards internal range liquidity. And, we see that we have that daily fair value gap. And now we see on a 4-hour time frame, we're also aligned with the, 4-hour bearish order block, right? So after this point, we understand that we are at a premium price. So we understand that we want to see new selling being introduced to draw the market lower as to reach into sell stops because we are bearish. The institutional order flow is bearish, right? So let's get a more broadened perspective on the H1 time frame. Okay, cool. So on the H1, right? The reason why we wanted to see price draw all the way up there is firstly, when price was up here at this breaker, we saw new selling starting to be introduced into the market, right? And the moment you got this market structure shift, what we start to see here is new buying starts to come in, right? That resulted in the move towards that rejection block. And then you start to see more selling. And then off of this point again, you see this formation of relatively equal lows, and then you see new buying start to come in again, right? And then you see heavy movement towards the downside, which results in this liquidity void, this inefficiency. So that's the first reason. You want to eventually see price go all the way up here as to fill this inefficiency. And the only way price can do so is if it pulls back into that H1 bearish order block, right? So only once price reaches into there, that's when price is now being efficiently delivered. And then you'd want to see new selling start to, come into the market. The second reason, right? You'll see it much more clearer if we go on to, so we'll just work on the hourly time frame and let me just delete this H4 one. We'll work on the hourly time frame and the M15. So the second reason is because of this last candle over here, right? This last bearish candle. Like I said, from this point, smart money bought the market higher into a deeper premium, right? And us having to see this movement of the market higher, it meant that they had to buy this candle, right? And them having to buy this candle, then come back here, and then you see new buying again. This is smart money trying to push the market into a deeper premium, perhaps to manipulate price into a deeper premium, and get people to have this understanding or an idea that the market is going to continue higher. So that's them trying to manipulate the market higher to get into a further premium price in order for them to sell against those people that smart money had manipulated, right? So the moment you start to see heavy movements of price action towards the downside, that results in, firstly, like I said, the liquidity void. But another thing as well, those buy orders that they had initiated there are now in sell and in loss, I meant to say, right? So eventually in future, you want to see the market come back all the way up there, and to mitigate those buy orders that were initiated there, them having to mitigate those buy orders, right? And off of that point as well, you'll start to see them introduce new selling orders, right? So you've mitigated the buy orders, so it's buyer's remorse, and then you introduce new selling orders. So that's the second reason in which why I am now seeing a draw towards the downside, and hence that's why specifically I am in a sell order, right? And although there's a likelihood of us, like I mentioned in that post, there is a likelihood of us having to disrespect this order block and go further into premium prices where we take these buy stops up here. I am still confident that we are going to be seeing selling momentum starting to, step into the market off of this point over here, right? Because of the, you know, overwhelming confluence for the downside movement. We are in this daily fair value gap, and we've just reacted by taking out the high, tapping the high, and then, you started to see a bit of rejection, right? And the other reason as well, making this H1 order block very strong, is due to the fact that we do have these buy stops represented before the order block. So this makes it an inducement order block. We understand that smart money is going to be looking to sell against these buy stops, right? So to give you guys an understanding on how I went about entering this market, I understand that, this is basically ICT 2022 mentorship. I understand that if I'm looking for selling to occur, I'd like to see my London session manipulate my Asian session high as to formulate the high of the day, and then I sell against that, you know, to distribute basically against that, right? So what I'll do is I'll wait for my Asian sessions high to get taken, right? Which was this point over here, and then it drew into my mitigation block and my order block. So after that point, what I want to see is a market structure shift, which occurred over here, right? And then after that market structure shift, I want to see price pull back into a fair value gap, right? in which there's the fair value gap. I'll put my SL and my high, and all I'll do is target 4% on that day, right? But with that being said, best regards, the architect.